Invest sensibly, save, and keep saving, and delay retirement as late as possible. Well, that's the conventional wisdom about retirement planning, but you should also consider what your income needs will be in retirement. And joining me is Jeremiah Pangan in Costa Mesa, California. So explain transitioning a portfolio for retirement.
Yeah, certainly. Thanks for having me. I just want to start off by saying, hopefully there is a plan for retirement. That's number one. But number two is in retirement, we should really have a plan as far as, what dollar is going to be spent when. That'll tell us what bucket to put it in, whether it's in, the next 1 to 3 years, 3 to 5 years, 7 and longer. So that's where we find the most success, is to really just apply a plan and stick to it and see where it goes from there.
Is the 4% rule still a valid concept?
The 4% rule, it's a nice general rule. However, it's not the case for everybody. Really what it comes down to is diving down to each client's specific needs and figuring out, hey, is it actually 4% or is it more? But the biggest fear is of course just making sure that there is enough for the long haul.
And when it comes to income, how do you know when to take Social Security?
Yeah, great question. Social Security can be a tricky one. However, we're here to walk you through those steps. Whether you're single, whether you're married or widowed, we definitely look for the best opportunity to maximize your Social Security benefits. You've worked hard for those, and when it comes time to reap those rewards, we're there to help you with that.
Now talk about the importance of tax planning in retirement planning.
Yeah, there's a fine balance there. You have to pay the piper, but you also want to make sure that you've got enough, for yourself to enjoy. And so tax planning, the biggest thing is we don't want any surprises, right? So if we're in constant contact and communication with our client and their CPA, preferably, then we can meet the challenges ahead of time. So we can do some planning on the back end if we need to, but ideally it's best to just be in communication constantly with the client and understanding what their income forecast is for that year.
That was Jeremiah Pangan in Costa Mesa, California. Thanks for watching Retirement News Online.